Welcome to the Strategic Treasurer Podcast, your source for interesting Treasury news in your car, at the gym, or wherever you decide to tune in.
Technology has changed significantly in recent years, and most Treasury groups don't have the luxury of staying on top of the full range of developments occurring in various platforms, technologies, and services within the market. Given the range of change and limited bandwidth, the natural tendency is to narrow the areas that are explored during selection. It's critical for Treasury professionals to understand their business needs across a comprehensive continuum of Treasury requirements. It's just as critical that they understand their specific technology needs and how they fit within the overall technology landscape in order to have an optimal alignment. On this episode of the podcast, Strategic Treasurer's Craig Jeffery interviews Director of Strategic Sales Kristin Robertson and Senior Solutions Consultant Jamie Florio of Bottomline Technologies. Listen in as they explore common challenges and solutions in making the right technology choices to help reduce costs, errors, and inefficiencies, while positioning you and your company for optimal growth.
Welcome to this edition of the Treasury Update Podcast. I'm talking with Jamie Florio and Kristin Robertson from Bottomline Technology on the topic of, is your Treasury technology aligned with your needs? This is the concept that sometimes people buy technology that has no bearing or no longer matches what their needs are. We wanted to explore this topic, and I was able to catch up with them over the phone. So welcome, Jamie and Kristin.
Good afternoon.
Good afternoon, Craig.
Excellent. So just in terms of background, what we see in technology spend, whether it's for direct Treasury technology or payment technology, organizations are spending very large amounts to improve their technology, the controls, security, and efficiency. Those are some of the key drivers, and organizations have extremely elevated spend levels. And this has been going on for several years, and there are strong plans to continue the spending. This is driven by fraud. It's also pushed by the need for greater efficiency and new payment types, as an example. So there's new increased expectations. Some of the challenges that exist in terms of a background on this has to do with people buy systems, they buy more than they need, or buy elements that maybe don't work. I think this is one piece we wanted to talk about in a few moments, is how much of a system is bought and not used. And just picking on Treasury management systems for a moment, we do a survey every year to see how much of a system is used. 40% of companies use 81 to 100% of the functionality or modules that they bought. And if you look at the percentage, 18% use less than 40% of what they bought and paid for. And we have other stats that show the percentage that use between 60% and 80%, et cetera. But the key part is people are buying technology across all sectors in the financial sector and others that they're not using, not taking advantage of. I think this brings us to a time to rethink what's going on, why we're buying technology. Are you lining the technology you get with what your needs are? I just want to start off, Kristin or Jamie, if you had any comments about that before we get into some of the more salient subjects.
Well, I think you mentioned complexity, and some of the drive towards spend is the increased environmental complexity that we're doing business in. And complexity is not a bad thing. Complexity is a natural outcome of a healthy business. A business that becomes more complex is an excellent thing. You want to have more lines of business, more revenue streams, more banking partners. But in thinking of terms of how to control those Treasury streams, we think in terms of people, process, and technology. It could be that there's an overspend on technology and not a good overall viewpoint of how the people, the process, and the technology contribute to kind of control the operational complexity to manage the business.
What are some of the different elements that drive an organization from being perhaps simple to highly complex? It's no longer your groceries are bagged with paper at the checkout. It's paper, plastic, bring your own, or just carry it out. What are the complexity elements that organizations have that are a challenge?
I think even the businesses that consider themselves simple are probably more complex than they believe. Any business over time organically through acquisitions will multiply the things that they deal with, whether that be core systems, ERPs, source systems, banking relationships. And that's not a bad thing. We go through rationalization steps and strategies along the way, but it's an excellent thing to do that. But even the most simplified businesses do get complicated over time.
Yeah, I couldn't agree more. What we're seeing a lot with our clients is they have a lot of bank accounts that come into the business, in many cases, a long time ago, and they're being used not just for outgoing payments, but for incoming collections. So it's really hard to rationalize those banking partners and bank accounts, especially when you've got incoming monies into those accounts. So they tend to linger and stay in their business throughout a much longer duration of time.
Yeah, that's a good point. I think some of our surveys that we pull data from, we ask about how many banks you're dealing with within your home country or internationally, how many bank accounts, and even in the context of many organizations going through a rationalization program of reducing bank relationships or trying to reduce the number of accounts, those things tend to skyrocket because they're acquiring companies, they're expanding, and as they do that, their rationalization is usually matched or overcome by new acquisitions, new businesses that they're entering, new markets, et cetera. So whether it's currencies, number of bank accounts, number of entities, those all create challenges for visibility to cash, for an example, or for payments. Very interesting. But how does this complexity impact, let's say, some different elements? So why don't you describe payments? I mean, Bottomline Technologies is a big payments provider, payment hub, but also about some other elements that may be important, such as forecasting cash flows or anything else that there's an impact on.
Well, some of the complexity that comes with the payments is because of those geographies and banks. We talk about just the operational part of it. Where your money is sitting tends to help you make the decision of where those payments are going to come out of. And if you have money sitting in different banks and different geographies and different currencies, there's a natural kind of multiplicity of complexity there. So making those decisions to help keep the lines of business in line, to help fuel the business, and keep the operations of the business moving while funding business growth at the same time. Rationalizing those, of course, makes some sense, but you also have to keep some of the multiplicity in place to help keep that business moving. You can't streamline all the payments into one spot. That's not operationally practical to do that. So this consideration is to make sure that you have those multiplicity of banks and accounts and currencies and geographies in place to help keep those business and business units moving. But that does lend itself to some challenge of controls to make sure that you have visibility to the payment volumes. You even know what the payment volumes are, the counts and totals, the actual amounts, how much money is going out and coming in. There can be struggle with that, especially when you're dealing with lines of business in different places in different time zones. And having that visibility, there can be a struggle. So part of those rationalization cycles is not just reducing. It's not practical to have one bank and one account. We all know that. So there's some natural complexity there. But the rationalization cycle may be to how to gain visibility of the things that you need to have.
So is that a position of adapting to a natural level of complexity or even hyper complexity where you're dealing in multiple countries, multiple currencies with multiple systems, with changing back end systems at the company level, changing formats for payments or information reporting? Is that just trying to adapt to the new world, or is that something else?
Well, there's always some adaptation there. We might talk about technology for a second. In one place I've seen recently, the over-application of technology to possibly solve some of the multi-currency country issues. ISO 20022, for instance, is a good buzzword. It's a good standard, and it's being applied correctly in lots of circumstances. But as technology go, it's not a silver bullet to solve all of your complexity problems when it comes to multi-currency and multi-country challenges. So while application of these certain technologies can help rationalize some of this complexity, it's also the application of not just the technology, but people and process. Actually, really looking at it and seeing what am I trying to accomplish and finding the best way to do that, and not just a blanket application of a solution that's supposed to solve everything.
Just to add to that too, when Jamie talks about the ISO 20022, a lot of clients think that that's kind of the panacea to give them bank interoperability, where they can easily switch from one bank to another or have one standard form that could work across their many banking partners that they have. And unfortunately, what they're finding when it comes to actually executing upon that vision is that each bank is slightly interpreting the ISO 20022 in their own unique way. So there's certain challenges that they're facing from a technology perspective that's making it hard for them to standardize on one specific message.
So is what we're saying here, when we're trying to meet our various needs, we're trying to, simplify. It might be rationalize accounts down to the minimum level, create certain standards of technology, certain standards of formats, so that it reduces those moving parts, right? More moving parts at each level. It's n times n times n times n. It becomes extremely complex because there's so many options. Is it trying to reduce that down? And you're saying that there's still a certain level of complexity that exists, even when you have a standard format, for example. People can put different things in fields. How are we to look at that?
Yeah, it's a good way to look at it. I keep coming back to that people, process, and technology. If you try to reduce the complexity of the process, naturally there's reduce the complexity of how many people you have to throw at it and the technologies involved. But reducing the complexity of the process will help you rationalize the other ends. They're really looking at it from the technology standpoint is probably the wrong place to start, because that is just a tool that's used as part of the end purpose. If you simplify the process, you're always going to have different technologies involved. It's never going to boil down to one. If you ever get any technology boiled down to one technology provider or one banking partner, that's going to be for exactly one moment in history, because then the next thing is going to happen and you have to add some complexity again. So having a process that allows you to plug in new technology in a relatively simple way is a better way to look at it.
So when you talk about plugging things in or modular technology where you can put different pieces together, whether it's data, how you connect to different elements, the systems and processes, and ultimately down to reporting and analytics, I think that brings us to a discussion of the technology stack or the technology components. So should we think about technology as I guess part of the question answers itself. Is it a single point, perfect for everyone or everyone in a particular situation, or is it a continuum of solutions and elements that reflect the complexity elements that are adaptable and plug and play? And maybe you can talk to that element.
Yeah, they have to be adaptable and they have to be a bit plug and play. If you think about it of analogies of building materials, for instance, houses are built differently depending on where and for the purpose. Small houses, large houses, houses in the south, houses in the north. They need different aspects of the building materials and different technologies to suit the purpose. The same with the technology stack we need for treasury operations, payment operations. There's no one solution that's ever going to do everything. And as time goes on, it seems like we've come full circle a little bit. I think 10, 15, 20 years ago, we were building systems. We had a lot of homegrown systems. We bought tool sets. We enacted systems that exactly met the needs of our business of the day. Well, as time went on, we realized these homegrown systems became awfully expensive to maintain. And so we started looking at store-bought or off-the-shelf software to accomplish our purposes. And now we're looking at new technologies that allow us to go from on-premise to SaaS solutions and the API environment of technology today. And it seems like we're coming to a place where we have all these toolkits again with API toolkits, and we're going to start building our own things again to meet specific purposes.
Following up on that point, maybe with some specifics, let's say we're talking about gathering bank information. There's different formats. There's BAI2, there's the MT940, there's prior day and current day MT942, and then there's also some of the newer XML formats. There's methods of delivering those, and then I think you've mentioned already APIs, or application programming interfaces, where you can pull data down just very specifically using an API versus a file transfer protocol to, pass a file over, process it, load it into a system. So how do we think about that element there, right? Just getting bank information that can come in different formats. Do I need 15 different channels? What should people do to take advantage of the technology in an era where there are more options and we need to handle multiple channels, for example?
It's an excellent question. And in that context, we should make sure that we're choosing something that is flexible enough. Any solution or technology that is focused on one delivery mechanism is probably too narrow focused to be something that's generically useful. For instance, any one technology that's focused on just BAI ignores delivery of that same information to other channels, or just through the CAMP messages and the ISO 20022, or just through the open APIs and are becoming prevalent in Europe. Anything that is only focused on that one delivery mechanism is not going to meet the complex needs of an organization today. So having something that can deliver rational data that's collected through multiple endpoints is a better way to apply technology to meet that solution.
I think that applies when you're looking at a large global organization with multiple banks and the need for that multi-channel connectivity to those banking communities. So as you talked about earlier, the continuum of complexity, if you happen to be a corporate that's in one country, partnered with one bank, with one ERP, only supporting one channel might make sense for you. But as you layer on the complexity that you talked about earlier, Craig, that's when you need to start having the right technology partners that would allow for you to grow with the multi-channel connectivity.
Yeah, I like that. A $20 million firm that only does business in, let's say, the U.S. and makes payments only with checks and, dealing with one bank, they can use the bank portal and it will solve 99% of their needs or more. It may even load it to QuickBooks Online for them. But as soon as you start to grow, you're dealing with more banks, you're in more countries, more payment types, more receipt types. You have to have an ability to handle those, and whether you build all that capability in-house, you buy tools, or you push those services out, there's a continuum. What makes sense for one company may not make sense to another. I think the other point, too, and that I think is worth noting, there's some organizations that are very complex in certain areas. Some organizations in the energy sector, tremendous amount of exposure to commodity prices typically. Other organizations, let's say non-bank financial institutions, like insurance companies, they're not doing hundreds of payments a month, they're doing millions and tens of millions of payments a month, and so on. So certain organizations have a much different genetic structure in terms of complexity, and that has a bearing, I think, as well. Kristin, you work with a number of different companies. Do you have any other insights into complexity drivers?
Yeah, I totally agree that depending on which industry sector you're in, it definitely can affect what matters most to you as a company. Personally, working with a lot of large insurance companies, they're highly regulated entities, and frankly, payments are the promise that they have to their customers. So the reputational risk that they have associated with making payments and making payments accurately and on time and without fraud makes it that much more important to them. So I think certainly it makes it far more prevalent and important for them to make sure they've got the right technology suite and technology partner to make those happen efficiently with security, audit, and control.
We talked about on-premises, off-premises, the idea of you have to install some software on your own servers, back them up. you can have the same type of technology hosted in a data center you run or a vendor runs, or software as a service where the technology providers worrying about and taking care of the hardware and the software updates and patches that exist. So for SaaS, the SaaS services and hosted solutions continues to take over more and more of the overall tech landscape in finance, from treasury management systems to reconciliation platforms. We've been seeing it more in the ERP space, where they're gaining an increasingly large percentage of new sales and new platforms. I guess when you look at it, you're talking to many companies, you have offerings that hit those different delivery methods. What do you see as some of the key decision points for on or off premises? Is it complexity? Is it IT size? What are some of the decision points?
I think I've seen three different motivators into making that decision. First, the kind of question, do I need an on-premise solution based on my operational requirements? Would having a SaaS-based or something that isn't in my network overly make my operations overly complex and get in the way of getting things done? The second question is, should I have someone else house my data? Are they more secure than me? And thirdly, it's cost. Does it cost more to have something on-premise than a SaaS solution? And I think those questions being answered, we've seen a rapid transition probably in the last 5 years. 5 years ago, if you were to ask 9 out of 10 corporates if they would consider a treasury or a payment system that wasn't on-premise, 9 out of 10 would say no. It's almost becoming opposite of that now.
Yeah, that's interesting. When you look at what banks did, banks used to, for the corporate customers, they had diskettes. They would go install solutions at their customer site, and they loved it. They had 100, 1,000, and 5,000 customers. Then they had to do upgrades. And they said, this is not going so well. Then they started putting out portals, so 96, it was a big era, that time frame, 95, 96, 97, of installing everything for bank connectivity. And then they moved to portals by the time we hit 2000, 2001, and 2. That's when people started moving everything off so that they could do the updates. By 2006, most of new treasury management systems, for example, were software as a service, fully hosted. We used ASP as a term then. So there was definite movement back then to move different pieces, and organizations got more comfortable with that. So I guess here's a question for you. As a technology vendor, you have a range of clients, you have a range of offerings, because technology that was very popular, effective before still has to be supported and run. You wouldn't necessarily pull it out. And then there's needs of other organizations that may be different, sit on a different platform today, or have different functionality. It may want to be hosted in a different location. What is your goal to meet the needs of current and future clients? How do you manage that? I guess a transition is there is a general move towards hosted. How do you deal with that complexity?
Yeah, you're right. There is a general move towards hosted and SaaS solutions, although a large part of our customer base and the market still wants on-premise solutions. Some of that's for the cost, but some of that is for their operational requirements, needing direct access to data and systems. So as an organization, we supply both. First off, we develop the solutions, and then we deliver the solutions those two different ways so we can meet the customer's requirements.
Yeah, I agree with what Jamie's saying. We basically allow our clients to have their cake and eat it too, so they can take our solutions on premise. They can also have the solutions hosted by Bottomline. There are some of our products, though, that just are only available as software as a service because of the nature of what we're delivering, where it's more of a network or community of folks that we're bringing together collaboratively. So in those types of solutions, we can only offer that as a outsourced multi-tenant solution. But it is nice for the really critical applications such as payment, cash reporting, and certainly bank connectivity. We do allow for clients to choose how they prefer to take those solutions from a technology delivery perspective.
I guess that makes economic sense. Sometimes I think it's easier, just like if you lived in an area that never had great telephone service and then they started putting up cell phone, you can skip the whole landline items. But many companies have to support the transition from one technology to another, and that's both exciting and challenging. But let me just ask this other question as we draw to a close. Now, companies make errors with the decisions they make regarding technology. I mean, certainly, Jamie, you've talked about the people and processes, but when we talk about technology, people can make decisions that they buy stuff they don't need or something doesn't really work. How are organizations making some of the decisions incorrectly, and either why is that, or more importantly, how do you avoid that prescriptively?
Two main reasons for that sort of mistake. I see some organizations going all in on one package because of one key feature, kind of ignoring how the rest of it might affect their everyday operations. Alternatively, you mentioned earlier about being able to do 99% of the things on a bank portal. Some organizations are buying to meet 99% of their requirements, when in all truth, that's probably an overbuy. Most of what we can expect is to meet 80% of our requirements and meet the other 20% with some offline, some operational changes, some people, adding some more people. By trying to go from that 80 to 99%, that contributes a lot of the overbuy, making projects that are just too big to ever finish or ever implement, and therefore never actually coming to fruition.
Excellent. So I have a question. So if, and you don't have to answer this, but it's not meant to be just a question left out there. So if we're looking at problems, whether it's errors, or we're looking at fraud, or we're looking at some other type of very inefficient process, what drives costs? Errors or defects drive costs, and what drives defects and errors? One of the biggest contributors to that is manual processes. You can never get the kind of quality with manual processes that you can when it's system to system. Everything's validated across the way. How does that, whether you call it straight through processing or more efficient processes or less opportunities or handoffs, how does that impact the decisions people need to make as they're looking at technology as part of the overall process, if you will?
Yeah, I think that I totally agree. Straight through processing or systems to systems integration for making payments, getting balanced transaction reporting is a best practice. The challenge that we see is that when you look at really large and complex organizations, especially those who have many different banking relationships, they start getting into regions of the world or participating with certain banks where they may not be necessarily SWIFT members, and you start getting outliers outside of that straight-through processing opportunity. And that's where, as Jamie mentioned in his comments, you find customers wanting to just hit the straight-through processing goals, and they start taking on way more than they probably should because of the outlier banks that they have, and trying to automate where it may make sense given the low volume and the kind of boutique regions that they're in to handle those as a bespoke process.
And when it comes to overreach or errors that contribute to cost, I think one of the biggest contributions to cost I see is not capturing requirements up front, having assumed requirements, or having one of your requirements be, we want to continue doing this the way we've always done it. That will contribute to a never-ending project that never reaches your goal because you've never actually written down what your goal is. You have to go into a project knowing that your process probably needs to change. The technology won't fix it, and neither will just a change in process. It's a combination of the two. And by writing down the requirements, not what you want to do, but what you want to accomplish, that will help going into these mystery phases of projects and elongated phases of projects that tend to wander off, that end up adding way too much cost than you originally planned for.
All right. This has been a very interesting and helpful discussion. Any final points, Kristin or Jamie?
Well, I think it's been a really a great session. I think that what we're seeing in the marketplace is that the technology needs of the Treasury organization are changing. I think it's an exciting time to be in Treasury and payments and really understanding your needs. And as Jamie mentioned, having the right people, process, and technology partners. And I believe that it's partners plural to make sure that you're getting what you need and the right value from the partners that you have is key.
I also think it's important not to rely purely on technology to help solve all that issue. By relying purely on a technology solution, you may in fact be overspending, overreaching, overbuying. Look for the way that improves the process that you need to improve today. If there's a certain complexity that needs to be rationalized, if you need to increase your visibility, if you need to control your risk, give your payment processes better auditability, then improve those with the technology, not just buying a technology for sake of buying it and hoping that it fixes all your problems.
Excellent. Thank you, Jamie and Kristin. As I look at the title of this session, is your technology aligned with your needs? I think one key takeaway is that the needs are not just your historical needs, but what are your needs going forward to reduce that? So again, Kristin, Jamie, thank you for your time.
Thank you, Craig.
Thank you, Craig.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.